Hello, good morning, everyone. Good afternoon and good evening to you, depending on whichever part of the world you are tuning in from. In fact, I'm so excited to be with you here today as we had a phenomenal 24 hours in the market as we took advantage of the nosedive of the US dollar, especially after the CPI data came in yesterday, giving us a significant amount of profit through the last 24 hours. Before we kickstart the session, let's quickly confirm that we are all on the same page here. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. So I really appreciate your feedbacks here, as your feedbacks will give me a positive confirmation that we are good to go this morning. So while I wait for your comments and feedbacks, I will be loading up my chat right now, and let's see what we have here. All right. So I can see a handful of comment right here. Thank you very much, guys. I really do appreciate these feedbacks. I see your comment, Har099. Shalia, good morning to you. Najib Ghazi, good morning to you. ST3F, good morning. Manoli, good morning to you. Hello, Kari, how are you doing today? Thank you very much. Anonymous Case, good morning. Xian Yan, good morning to you. Mansoor Ral, good morning to you too as well. All right. I think this is enough for me to confirm that we are all good to go this morning. And it's on this note, I welcome you all once again to yet another promising edition of the Extreme Speed Live, which is dedicated to the art of price action based technical analysis. In today's session, we are going to be doing our usual by reviewing and positioning ourselves ahead of the New York session. And of course, we will be using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action this morning. Well, since the beginning of the week, we have been monitoring four major assets, which includes the US All Spot, the USTech100, the GBPUSD, and of course the XAUUSD, which is popularly known as the gold spot. And in fact, we have done phenomenally well in the last 24 hours. So we are going to be going into the details today to see how well these assets have done and how we intend to capitalize on the next move as we anticipate major event coming in from the United States today. For those of you who are joining us for the first time, you are highly welcome on board. I'm very excited to have you around with us this morning. You might be asking what this is all about and why you are here in this community. Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation for the New York session. The session kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during the course of this session so you don't miss out on the insights that we will be sharing today. Our aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you. So with that being said, here we will be diving right into the business, and as usual, we usually check on the economic calendar. As you all know how important this is, as these fundamental factors usually manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves ahead of the economic events today. And of course, what we usually do on the economic calendar is to focus on high impactful events. And based on the asset we've been monitoring since the beginning of the week, we are going to be focusing on both the United Kingdom and the United States economic docket. Now, for today, Wednesday, November 15th, we have a handful of events to look out for, and in fact, from the United Kingdom, we've already witnessed data from the consumer price index, which came in way below expectations, hereby giving us a negative variance in that regard. Now, we are going to be looking at the GBPUSD charts to see how the market had reacted to this event and how we intend to manage our existing position if we still have any, and get ready for the next move for today. Then later on today, in about an hour or two from now, we shall be witnessing the producer price index. For those of us who don't know, the producer price index is usually released by the Bureau of Labor Statistics, and it measures the average changes in prices in primary markets of the US by producers of commodities in all states of processing. Now, a higher reading is considered as positive, hereby giving us a potential bullish traction for the US dollar, while a low reading is considered as negative. Now, if we look at the previous data for the month of September, it came in at 2.7% expansion, and we have economists projecting another expansion of 2.7%. So we will be looking forward to what the actual data is going to be today. Will it be just as expected, below expectations, or even beyond expectations? Then later at that time, the same time, we also have data coming in from the United States as well. That is the retail sales data. And for those of us who don't know, it's released by the same department, that is the U.S. Census Bureau. And it measures the value in total receipts of retail and food stores in the United States. Now, the data here also, a high reading is considered as positive for the US dollar, while a low reading is considered as negative. And if we look at the previous data for the month of September, it came in at a 0.7% expansion, while we have economists projecting for the month of October a deficit of 0.3%, which is not a promising projection for the US economy. So we're also going to be looking forward to what the actual data is going to be on that one. And of course, with the information we have gathered on the economic calendar and the timing, you know how we do it in this community. We do understand that the anticipation of these events alone usually have a tendency to influence the sentiment in the market, which of course would reflect on the chart as price action. Now, talking about price action, let's dive right into the chart and let's see things from a technical standpoint. So the first asset we are going to be looking at this week, well, as usual, my USOILSPOT is taking some time. Okay, here we go. So the first asset we are going to be looking at today is going to be the USOILSPOT. And on the USOILSPOT, we've actually done pretty well since the beginning of the week. Remember, as at yesterday's live session, we were running with approximately over 200 pips in profit on this asset, as we have been buying the assets since the beginning of this week. However, if we look at things from a fundamental perspective, and of course at the latest development in the market, we saw that during the Asian session, we saw some resurgence in buy pressure, which appears to be negated at this point in time. And another thing that I will say will some factors are behind the scenes that are actually influencing price action in the last 24-48 hours. And one of them is the International Energy Agency, who yesterday joined the OPEC Plus in raising its oil demand growth forecast for 2023. This announcement, coupled with recent commitment from Saudi Arabia and Russia to extend voluntary cuts until December of this year, has bolstered oil prices, and in fact, the prevalent selling bias towards the US dollar has further propelled oil prices upward too as well. Now, going into today's session, are we going to be seeing a continuation to the upside for the US oil, or are there chances that price will drop to the downside? Well, before we go into the details on this one, I would like us to run through how the week started for us, especially for the sake of those who missed out on our earlier sessions this week. Now, at the beginning of the week, right here on the 1 hour time frame, we initially identified a range where price was confined within the $76.75 level and the $76.35 area to emphasize the level of indecision that was going on in the market at the beginning of this week. Then, in addition to the range here, was this ascending trend line we spotted. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we do want to be looking out for patterns and structures that supports the idea of buying that asset. Now, coupled with this ascending trend line here, we positioned ourselves just right above the $76.75 level to capitalize on that uptrend move. And I said here on Monday that for those of us who had missed out on that opportunity, that we are likely going to see price retrace back into structure to incite another move, or maybe price will break out of the $77.50 level to welcome another opportunity to buy, which of course you saw what happened here. Then and again, we also added one more around this area, but during our live session yesterday, we said that we will be moving all stop losses to around that $78 area to secure the buy positions. And of course, if you had moved your stop losses accordingly as advised, you must have been taken out of that buy position with a minimum of 200 pips around that area. Then during the live session yesterday, we acknowledged another potential opportunities that buyers may continue the movement to the upside, and in that regard, we were looking at the breakout of the $78.63 and $78.43 to capitalize on the next bullish move, which of course gave us another 120 pips move before the bearish momentum came in. So for those of us who are part of the profitable journey so far this week, well done and kudos to you for capitalizing on this opportunity. So right now we are at a very crucial juncture in the market where it appears that we are beginning to notice some selling pressure since the New York session yesterday. Now the question going into the New York session today is, how far will the sell pressure go? Will it continue to the downside, or will it just be a retracement of the impulsive move that started this week to incite another uptrend move? Now, to have a better understanding into this current market structure from a technical standpoint, I would like us to scale up into the daily time frame so we can have an holistic perspective into what is really going on in this market. And of course, for the sake of those who missed out on our earlier session, this is an opportunity for you to be on the same page with us. Now, we started our analysis on the daily time frame where we identified a couple of levels we said we will be using to guide our decisions for this week. Now, one of the levels we identified was the $75 area, which, as you will see, has a memory for buying power if we go to as far back as the month of July. Now, we saw how this level had played a major role in negating all attempt by the sellers to break through the structure in the last 4 to 5 months. And during the previous week, we saw how, despite the strong bearish momentum, buy pressure resumed around that area one more time. Then, in addition to the $75 level, was the key level for the week, which is situated at the $80 area. And one thing about this level is how it had played a major role in negating sellers' attempt since the month of August. And not until last week's trading session, we finally saw the breakdown of that structure with an engulfing bearish candle to give us an a bearish signal. And of course, from a technical standpoint, when we have price break down a key structure such as the $80 level we have here, we expect that some point in time price may come back, retest the structure to incite a downtrend move. And it is with this idea in mind that we decided to join a bullish opportunity with the hopes that price action will climb maybe into the $80 area or this descending trend line before a bearish move will happen. And if we look at what happened yesterday, we saw something here that looks like a shooting star candle, as you will see here. And from a technical standpoint, whenever this candle is spotted on the chart, it gives us an insight into the presence of sellers in this market. Now the question here is, as this retracement phase ended, that is, are we now going to be seeing price drop to the downside from here with the hopes of the continuation of the downtrend that started last week, or will this be a false signal that might still incite an uptrend scenario back into the $80 mark? Well, to have a better perspective into what is going on around the $78.50 and the $79.50 area, let's scale down into the lower time frame to see what I found. Now, when we scale down into the 1 hour time frame and while trying to dissect the current market structure this morning, I was able to identify a beautiful setup which we will be using to guide our decisions for today. Now, before I go into that, let me remind you of how important this ascending trend line is. Remember, this trend line has been supporting the bullish momentum since last week Wednesday. And of course, if price still remains above the trend line, we want to be looking out for buying opportunities. However, if we look at the impulsive bullish leg that started this week, you will see that price action appears to be transitioning into a reversal pattern in the form of a head and shoulder pattern. So we have the left shoulder, then we have the head right here, and it appears price action had completed the right shoulder. And of course, you know how we do it in this community. Whenever we identify a potential reversal setup, such as an head and shoulder in this case scenario, the next thing we want to be doing is to mark out the neckline of that structure, which needs to be broken to validate the potency of this reversal pattern. Now, if you look at what we have here, we have a beautiful neckline situated at that psychological zone at the $78 area. So we will need price to break down the structure to confirm that we now have a reversal setup to catch. Now look at what has happened here in the last couple of hours. Price action has finally broken down that neckline here. Now the question now is, are we going to be seeing a retest of structure to incite a downtrend continuation? Now you will agree with me that we are at a crucial juncture in this market. So let me extend this one out a little bit, as we will need it to guide our decisions going forward. So this is the $77.50 area. I do hope you still have this line marked out on your chart. Okay, so we have the 77. So I would like to have this right below on the bottom. Good. So we have the $77.50 level. Now we have price break down the neckline of that potential reversal pattern we identified. So for those who had sold at the breakdown of the $78 area, well done to you. It's okay, there is no problem. Ensure you have your stop losses in place anywhere between the $78.40 and the $78.65 area seems most appropriate to place your stop losses for any sell positions here. However, for those of us who had missed out on this opportunity or waiting for confirmations in the form of a retest of structure, I'm on the same page with you guys, as I'm looking forward to see if the market will come back, retest the structure and the appearance of selling pressure, revealing that buyers are finding it difficult to stay above the $78 area, would reflect on the chart as continued selling pressure, giving us an opportunity to join the downtrend move. Now, if price action continues to drop and it breaks down the $77.50 level, will be welcoming more sell position. Now, there is a caveat to this current setup we need to take into consideration while we enjoy the bearish move. Now, if price drops and continues to the downside, remember that we have an ascending trend line we marked out at the beginning of the week. So if price gets into the ascending trend line, ensure that all stop losses are moved to secure and protect the sell positions we have, as we will need to wait patiently and see how the market will be reacting to this ascending trend line. And of course, depending on what happens here, will be determining if we are going to be adding more sell positions or getting ready to join the next phase of bullish momentum. Now, if price gets into this ascending trend line and it gets broken to the downside, then this will be a good signal that we want to be going further south. However, if instead price stays above the ascending trend line and we see signs that sellers are finding it difficult to break through or stay below this ascending trend line, then this will be a good opportunity to get ready to buy. So this is how we are going to be managing this trade here on the XAUUSD, on the USOILSPOT, Now, there's another thing I would like to emphasize here, and that is the $76.75 level, a level which was initially the resistant line of this range we identified at the beginning of the week. And remember that we saw the resistant line broken at the beginning of the week, and technically when a structure like this is broken, it is expected that price may at some point come back to retest the structure that was broken to incite an uptrend move. So everything is lining up in that direction. So let's see how far this bearish momentum will go. Will it go to as far as the ascending trend line and the $76.75 level, where depending on how price reacts to that zone will determine if we are going to be adding more sell or get ready for an uptrend situation. Now, with that being said here, I would also want us to consider the potentials the buyers also have if price does not get into the ascending trend line. And of course, you know how we do it in this community. We always want to keep tabs with the opposite direction as well. Now, in this case scenario, for me to consider buying if price does not drop to the downside, instead, I want to position myself just right above the $78.63 level, where I will be looking out for buying opportunities. So if price can take out all the sellers within this area, then the reversal pattern that we identified here will now be negated, hereby welcoming opportunities to join an uptrend move. And if price continues to climb up, then break out of levels such as the $79.35 level and this $80 area will be welcoming more buy positions. So I will encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. So at this point in time, we have a reversal pattern where the neckline at the $78 area has been broken, emphasizing some short-term bearish momentum. And if this continues, let's see how far it will go. And if it so happens we get taken out here, then the breakout of the $78.63 level will be welcoming buying opportunities. So these are my views on the USOILSPOT for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So I see comments here. Remy, for sure, good morning to you. Glad to have you around with us this morning. You are asking a couple of questions here. You said, I have problem confirming breakouts, and how to identify the breakout confirmation patterns. All right, beautiful question there, Remy, for sure. Well, first of all, I will say this. I've emphasized this countless of times here in this community on how we intend to capitalize on this kind of breakout. But let's take the case scenario we have here on the US All Spot, where we already have the breakdown of that neckline area around the $78 level. Now, in this case scenario, for those of us who had missed out on the breakdown, we do want to see price come back to retest the structure to give us an opportunity to join the bearish move. Now, what we are going to be looking out for here is quite simple. We want to see price retrace back into the structure right here, and as soon as price comes into that area, we scale down into our lower time frame, let's say the 15, 10 minutes or 5 minutes time frame, to look out for signs that buyers are finding it difficult to go above the $78 area. And usually when this happens, we normally see it on the chart as continued selling pressure just right around or below the $78 area, and most of the times we could see some lower highs and lower lows around that area, which further emphasizes that sellers are gradually building some momentum behind the scenes, and in that regard we want to be joining that sell momentum to the downside. So that is how we simply look out for those opportunities. We want to see signs that in this case scenario, now that we are looking out for selling opportunities, we want to see signs that buyers are finding it difficult to climb above the $78 area. But if we see an engulfing candle strike above that area, that is a bullish engulfing candle, then that will negate the idea of even selling at that point. But if it retraces back into the $78 area, then with lower highs and lower lows, then this further confirms that sellers are building up momentum. So usually we look out for the confirmation of the retest of structure on our lower time frame. So I do hope that this explanation was helpful in making things a little bit clearer for you. Please let me know in the comment section if you are okay, and if you are not, let me know, so I would emphasize on that, and let me know what you don't really understand. All right, so in the absence of no questions at this point, I want to assume that we are all on the same page, and in that regard, let's move on into the next asset on our watch list. So the next asset on our watch list for today is the USTech100, and finally we saw price break out of that 15,530 level during the New York session yesterday. Remember, we already had a buy position triggered during our live session yesterday, and currently we have about 360 pips running in profit at this point in time. For those of us who are taking advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, for the sake of those who missed out on yesterday's live session, let's quickly run through how the week started for us here in this community, what we saw and what led to the decisions we made. Well, on the 4 hours time frame here, the first thing we observed since the beginning of this week was the fact that price action was consolidating and confined within the 15,530 and the 15,445 area to give us an insight into the uncertainty that gripped this market at that point in time. In fact, this consolidation phase lasted for over 36 hours before that traction happened. Now, during our live session yesterday, I made mention that because of the fact that even within the flat channel, we were able to observe a series of higher lows, which gave us this beautiful ascending trend line we had here. And one of the things we agreed here yesterday is that as long as price remains above the ascending trend line, we shall feel comfortable in the buy position. And in that regard, we placed a buy stop order above the 15,530, and look at what happened here. We saw an engulfing bullish candle spring out of that structure and went all the way to the upside, and in that move gave us over 360 pips in profit. So once again, for those of you who capitalize on this opportunity, well done and kudos to you for being on standby to capitalize on this move. And of course, you know how we do it in this community. As soon as price moves significantly well in our favor, we do want to be moving our stop losses and protect the current buy position. And for those of us who still have a buy position running at this point in time, I want to encourage you to move your stop losses accordingly. Move your stop loss and secure the current buy position we are in right now. And from the current market structure we have here, I will be suggesting that anywhere around the 15,820 and the 15,770 area seems most appropriate to lock in our profit at this point. So move your stop losses on all buy positions around that area, while we also give enough breathing space for price action to move around, with the hopes that price will continue to the upside. Now, with a well-secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying the USTech100, or are there chances that we will be seeing some profit-taking activities after majority took advantage of that impulsive move that started yesterday? Well, before we can have a well-informed decision going to the New York session today, let's quickly take a review of the higher time frame so that we can have an holistic perspective into what is going on here. Now, at the beginning of this week, our center of focus started from the daily time frame, where we obviously acknowledge the fact that price action has been bullish since the beginning of this year. And to further emphasize the strength of the buyers here, we have a couple of ascending trend line, where the major one is this one highlighted on your screen right now. And of course, if you look at the structure closely, you can see how uniformly and consistently price action had respected that trend line. However, something interesting happened in the last 2 to 3 weeks in this market, where we saw price break down that ascending trend line for the first time, which gave us an insight into the possibilities that sellers could likely be coming in, as we looked at the potential of a retracement back into the structure to incite a downtrend move. However, based on what happened during last week's trading session, we saw some selling pressure resume actually, but on Friday of last week, we saw that engulfing candle take us out of that position, breaking out of our key level, which was situated at the 15,300, to incite a new wave of bullish momentum. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. And one of the things we were looking at the beginning of the week was the potential that price may retrace back into structure in anticipation of the uptrend, but that never happened, of course. And one of the other things we also said here is, if price does not retrace, if a consolidation phase happens here, a breakout of the consolidation phase will welcome buying opportunities, and this is exactly what has happened here. And once again, congratulations to everyone who took advantage of this move. Now, going into the New York session today, and based on what we are seeing on the daily time frame, how do we intend to capitalize on the next move? Will this bullish momentum continue, or are there chances that we could still see some retracement back into the key level or the ascending trend line to anticipate another trend to the upside? Now, if we go to as far back as the month of July, we can see that the highest point price has gotten to this year is around the 15,930 level. So in that regard, I want us to acknowledge that area, as it's going to be playing a major role in determining how price is going to be moving today. So if we mark it appropriately, we have it right there. So we have the 15,930 level. So you do want to be marking this level out on your chart, as we will be needing it as a reference point, maybe to guide bullish opportunities or even bearish opportunities if buyers find it difficult to break through that area. So this is the level we are going to be monitoring for today's trading session. Hold on a second, I want this to reveal itself on my lower time frame, so let's do this quickly. So the 15,930 level right now is an area where we are going to be watching how price is going to react to that area. Now, what happens before price gets into that level? Are we going to be having some opportunities to add more positions? Let's scale down into the 1 hour time frame to have a quick look. Now on the 1 hour time frame, let's look at what is going on here. So this is the 15,930 level. So let me allow this to come within the space of the screen. So I will give this, let's see. Okay, let's do it like this, 15,930. All right, so we have a level right here. So let me bring this a little bit closer to... All right, great. So now, since the early hours of today, while I was trying to monitor the nature of price action around this area, I marked out a level here, have a 15,870, where I said if a breakout happens, I want to be adding more position, and I actually did add more positions, had a breakout of the 15,870 as price action gradually approached the 15,930. But if it so happens that price action comes back, for those of us who missed on this one, we could still look forward to a retest of structure where the appearance of buy pressure will be giving us more opportunity to add more buy position to our existing trade. Now, besides that one, I can see a trend line after we connect a series of higher lows here. So let's do this appropriately. So if we connect a series of higher lows, now let's bring back our candle chart and let's allow this pivot lows to be tested. In fact, I think I have a couple of them right here. Look at this one right here, and then let's have this one as a temporary one. So I will just give this a 1 pixel. So beautiful. So we have an ascending trend line here marked out. So as long as price remains above this ascending trend line, we feel comfortable in our buy position. So our stop losses should be way below this ascending trend line to make us feel comfortable in our positions. So now, with that being said here, I will be looking out for more buying opportunities. Hold on a second. I will be looking out for more buying opportunities as long as price remains above this ascending trend line, and if price action goes on to break out of the 15,930, which happens to be the highest level price action has been for this year, we will continue to add more buy positions to our existing trade. Now, there is a caveat to the breakout of the 15,930. There are two ways to which we can capitalize on that move. Now, the first one is for those of us who are profitable this week, those who have been buying with us in this community since the early days of the week, you'll definitely be in profit right now, so you can afford to risk some of the profit you had made so far this week to test waters above the 15,930. So placing a buy stop order above that structure is quite reasonable at this point. And if it doesn't work out, we know that we are only risking some of the profit we are made. However, if you are joining us for the first time and this is your first trade with us, then I would encourage you to exercise patience and wait for a retest of structure to happen, where continued buy pressure will now give us an opportunity to join the uptrend move. So we remain bullish on the USTech100 today as long as price remains above this ascending trend line. Now, in as much as we are looking out for buying opportunities, you know how we do it in this community, we also want to keep tabs with the opposite direction as well. What are the chances that sellers have in this particular market based on the current market conditions we have. Now, the first thing I would like to state here is that from a psychological standpoint, for those of us, for the majority of the market participants, the major key players in the market who had bought the USTech 100 at a cheap price around that range we identified here at the beginning of the week may start considering doing some profit-taking activities, especially as we anticipate the retail sales data coming in from the United States today. And if this is going to be a possibility, we might likely be seeing some bearish momentum happen here. And what are the chances that we want to see? What are the things we want to see on this chart that will make us feel comfortable selling? Before I go into that, let me emphasize here that the 15,930 is the highest point price action has gotten to this year, and we saw how sellers came in as soon as price got into that area in the month of July. Now, if it so happens that sell pressure comes in again around that area, we could likely see a crash or a sell-off here. Now, to sell the USTech 100, I would want to see price break down this ascending trend line. Now, if price breaks down the ascending trend line and does a retest of structure, we want to be getting ready to sell. Remember that we are not getting too excited here, that if price break down, we need some confirmations like retest of structure before we want to be joining that bearish move to the downside. So you can see how crucial this ascending trend line is for us today, as it is going to be playing a major role in determining how or the direction of price action today. So it's simple. If price remains above the ascending trend line, we hold on to our bullish bias. But if price breaks down the ascending trend line, then that will be a signal that the trend line may no longer have the capacity to continue to negate the bearish attempt, hereby welcoming opportunities to sell. So in that regard, you do want to be marking out these levels on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions, feel free to let me know in the comment section. As usual, I will be taking the next 10 seconds to see if there are any questions, while you also use that time to mark out these levels on your chart. Alright, I see your comment, Remy, for sure. Okay, I'm very glad you found that useful. Alright, you're welcome. Hello, innocent babe, how are you doing today? Good morning to you. Trust you're doing very well. So you said here that you're waiting for gold retest of 1,970 to enter the market. Okay, let's see what happens. I hope you'll still be around during our gold session. So we will be deliberating on that very soon. Okay. AHD9047, good morning to you. Thank you for checking in on me. All right. So in the absence of no questions, I will take this as a confirmation that we are good to go. So in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the GBPUSD, popularly known as the cable market. And in fact, on the GBPUSD in the last 24 hours, we were able to scoop a phenomenal 1,300 pips from 7 buy positions on this asset in the last 24 hours after taking advantage of that woeful CPI data that came in from the United States yesterday. It was a phenomenal move for us on this asset. And in fact, during the Asian session today, trading activities on the GBPUSD was initially caught within a range. We are going to be looking at that in a moment. And this followed a notable surge of 1.75%, pushing the pair to 1.25 area after the weaker US inflation data was released. Well, as we saw the high impact United Kingdom's consumer price index data for the month of October, which came in below expectations. We want to see how the market had reacted to this event, and of course remember that we also look forward to the retail sales data from the United States as well, which is coming up much more later today, and this may incite some volatility in either direction. So it's very, very important that we ensure that every buy positions at this point in time is well secured. Now, before we go into that details here, let's quickly run through how the week started for us here in this community and what led to the decisions for us buying the GBPUSD for this week. Now, at the beginning of the week, we had a very simple setup. In fact, we saw price action initially caught within a range where we saw price confined between the 1.22375 and the 1.22225 level, giving us an insight into the level of indecision at that particular point in time. And of course, you know how we use our flag channels in this community. After identifying uncertainty in the market, we do exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, based on this structure here, we saw here that at no point in time did price action ever came close to the support line, hereby negating the idea of even considering selling at all. And I told you all on Monday that I already bought at the breakout of the 1.223, and then a further breakout of the 1.22375 will welcome more buying opportunities. And I also said that for those of us who missed out on the breakout of the 1.22375, let's see if the market will come back and retest of structure, which was exactly what happened. So if you had missed out, the market was so kind enough to come back, retest the structure multiple times to give us our first buy position for the week. And since then, we have continued to buy the GBPUSD, and while buying, adding more positions to our existing trade as we identified multiple levels such as the 1.22535, 1.22710, 1.22805, and of course the 1.22 the 1.22 was this one right here, the 1.2300 level, which was finally broken to incite that massive impulsive move we witnessed during the New York session yesterday. So it was a phenomenal move. A total of 1,300 pips was caught on these multiple entries, and for those of you who took advantage of these opportunities, well done and kudos to you for being on standby to capitalize on this move. Now, for those of you who still have a buy position running at this juncture, well, I will encourage you to move all stop losses and secure those positions, as we might likely be seeing some profit taking activities come in this market anytime soon, especially when we are looking forward to the retail sales data coming in from the United States in about an hour or two from now. And based on the structure, I will be suggesting that anywhere around the 1.246 and the 1.25 area, or the 1.244 area, seems most appropriate to secure this current buy position. Move all stop losses, lock in your positions while we wait and see how the market is going to be reacting to the current market structure, or how they're going to be anticipating the retail sales data for more cues on how we are going to be managing this trade. Now, with a well-secured position at this juncture, what is going to be our plans ahead of the New York session? How are we going to be buying? What are we going to be seeing on this chart that will make us consider buying? Or what are we going to be seeing on this chart that will make us consider selling? Well, if you look at the structure closely, let me zoom this right in so that we can see things clearly. You will see here that since price tested this level during the later part of the New York session, that is the 1.25050 area, we begin to notice some bearish momentum resume in this market. And in fact, this led into price action confined within a range throughout the Asian session, that is between the 1.25050 and the 1.2480 area to give us an insight into the level of indecision during the Asian session. And of course, they did not come to us as surprise, as we know that at that time, majority were looking forward to the data coming in from both the United Kingdom and the United States. And of course, after the data came in, we saw our price broke down the support line of that range to give us a potential signal that price may likely go to the downside today. Now, another thing I was able to spot within this range is the fact that price was finding lower highs. As you will see, we saw price was unable to break through the previous high, hereby giving us a descending trend line to work with after connecting the series of lower highs. Now, in addition to all this, let me share one more thing with you here that will make us consider reversal setup here. If you see, price tested this high here, dropped back into the 1.248. It was unable to break through the previous high, and look at what we have here. We have a reversal pattern in the form of a double top structure. And from a technical standpoint, whenever we notice this kind of reversal setup, we want to be marking the neckline, which needs to be broken to validate the potency of that reversal pattern. And look at what we had here in reaction to the data from the United Kingdom. We saw an engulfing bearish candle breaking through the neckline of that reversal pattern to give us a signal that we might likely be witnessing some profit-taking activities today. Now, for those of you who took advantage of that breakdown, well done to you for capitalizing on that one. However, for those of us who missed out on that one, let's see if the market will come back, retest the structure. As you know, we need some retest of structure, which interestingly shares a confluence with that descending trend line, where the appearance of selling pressure around this area will be all we need to join a downtrend scenario here. So at this juncture, you would agree with me that we are at a crucial moment where patience is required, as we want to see how the market will react to this level. So if a retest of structure happens, we want to be part of a downtrend move. Now, let me quickly mention this. It's not all the time that price action does a retest of structure. We could have we do have situations where price just continues to nosedive to the downside without doing a retest of structure. And if that is going to be the case here, we don't want to miss the counter trend opportunity, as you will see here that the distance between where price action is right now and the ascending trend line we spotted at the beginning of the week is almost about 150 pips around that area. So this is not something we want to miss out on if price will drop to the downside. So let me show you what I mean here. So we have about 170 pips to catch here if price drops to the downside. So if price does not go back to retest the neckline and the descending trend line, then we have a level right here at the 1.24560. So you do want to be marking that level out, 1.24560. Mark out that level as a breakdown. Retest of this level will be welcoming more selling opportunities. So if price, instead of retracing back into the structure, it does not do that and breaks down retest, then we want to be joining a downtrend move. Now, I would like to state here that this move here is more or less a counter trend opportunity. Hence, you want to always be on standby to move your stop losses to protect your positions, because considering the strong impulsive move that started this week, price may still continue to the upside. So let's ensure that we are on standby to secure your position. But if you are someone who does not feel comfortable with counter trend opportunities, then I will just advise you to stay clear of these decisions. But if you are a scalper, day trader, this is something you want to be taking advantage of. So in as much as we're looking out for potential reversal setups here, we cannot still ignore the potentials that buyers can still push price to the upside. And if it does happen, what do we want to see on this chart that will make us feel comfortable jumping into a buy position? Well, since we already have a descending trend line here after connecting the series of lower highs, you know how we use our descending trend line. It will continue to help us guide any bearish opportunity here. However, if price breaks out of that descending trend line, then at this point I want to start considering buying the GBPUSD. So a breakout retest would be a beautiful opportunity to join. Then a buy stop order above the 1.25050. Breakout of that structure welcomes more buying opportunities in this market. So you can see how crucial that descending trend line is. So you do want to be marking it out on your chart, as depending on how price reacts to this trend line will determine how we are going to be trading. Price below the trend line welcomes selling ideas, and a breakout of the trend line welcomes buying ideas. What a simple setup we have here. So let's see how this will play out, and we will be back here tomorrow to review how well this is doing. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 5 seconds because I'm out of time right now to see if there are any questions, after which we move on to the final asset on our watch list for today. Alright, I see your comment, Innocent Babe. I'm very excited to have you around with us too. I hope you're still around so you can be part of the XAUUSD session. System 237's new here. Good morning to you. Glad to have you around today, and I look forward to seeing more of you during these sessions. Condi, good morning to you from Dominican Republic. Glad to have you around with us too. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, we have quite a phenomenal move in the last 24 hours here, as we scooped in over close to 1,000 pips in profit from 4 to 5 positions currently running at this point in time. And in fact, I'm so excited about this, and I do hope we all took advantage of this one. And for those of us who did, well done, and kudos to you for being on standby to capitalize on this move. Now, the bullish sentiment in the market continues to hold strong, as buying activities during the Asian sessions further emphasize that this price may likely continue to the upside. And of course, this trend is being supported by the ongoing US dollar selling bias, which has been fueled by the growing expectations that the Federal Reserve will not raise interest rate any further this year. Now, despite the current risk-on mood in the market, which is typically seen as a headwind for safe haven assets such as gold, I'm of the opinion that the gold may continue to rise up. And of course, if we also consider the geopolitical tensions in the Middle East, these are situations that usually attract a lot of investors to place their capital in a safe haven assets such as the gold. And in that regard, I will still maintain a bullish bias on this asset. Now, let's quickly take this into consideration and look at the current market structure and how we actually took advantage of these buy opportunities at the beginning of the week. Now, at the beginning of the week, we had a simple setup identified on the 1 hour time frame. The first one here was the ascending trend line after connecting the series of higher lows since last week Friday, giving us something to work with. Then, in addition to the ascending trend line, was a range where we saw price action confined within the $1,941.50 level. and the 1934 area, which further emphasized the level of indecision at the beginning of the week. And of course, you know how we do it in this community. Whenever price falls into a range like this, we do exercise patience and wait for either the breakout or the breakdown of that range to give us an opportunity to trade. Though we saw price break down the 1934 right here on Monday, but remember I made mention that for breakdown to happen, considering the fact that we are on an ascending trend line, we do want to wait for confirmations like a breakdown and a retest of structure, which never happened. And as a result of this, and with a buy stop order above the 1941 level, we capitalize on our first buy position for the week. And since then, we have been accumulating more buy positions. Remember, we also added one more, had a breakout of the 1945, and in fact during our live session yesterday we added another level at the 1948 area, where we said we will be adding more buy positions to our existing trade. Though we were not in the live session when I added another one at the 1959, so no problem. But for those of us who took advantage of these three buy positions, you will roughly be in a minimum of 700 to 800 pips at this point in time, which is not bad at all during the midweek. So on this note, I want to once again congratulate everyone who took advantage of this bullish opportunity. And for those of us who still have a buy position running right now, kindly move all your stop losses anywhere around below the 1970, of course. Between the 1970 and the 1965, move your stop losses around that area. Secure your current buy position as we look out for new opportunities. So this morning, while I was trying to dissect the current market structure in anticipation of today's trading session, I was able to identify some simple structures here that we will be using to guide our decisions for today, while also taking into consideration that we could still see some profit-taking activity, maybe in anticipation of the retail sales data from the United States today, or even after the retail sales data, depending on what the figure will come up with. Now, the first thing I noticed here was that that ascending trend line, which has played a major role in determining the direction of price action since last week Friday. So if we take a closer look at the pivot highs here, you will see this area was a selling niche. We saw the breakdown retest, selling niche here. It was sellers day around this area. It was selling around this area too as well, and not until yesterday when price broke out of that trend line. So we saw the breakout of the trend line. Price came back to retest the structure, all of which is in alignment with an uptrend continuation. Then in addition to this ascending trend line, I spotted a lower level at the 1970, which was initially the highest point as at the time I was doing my analysis this morning. So I marked out this level, and in fact, if you look at what happened around the 1970, during the New York session yesterday, we saw selling pressure resume around that area. And one thing I did this morning was to place a buy stop order above that area. That is, if price will break out of that structure today, this will give me a good opportunity to add more buy positions to my existing trade. And for those of you who took advantage of this one too as well, without me even telling you, I'm so impressed. Well done for identifying that structure. Now, for those of us who missed out on that opportunity, it's okay, no problem. Let's see how the market will play out as we anticipate the RSI data coming in from the United States. And of course, from a technical standpoint, whenever price action breaks out of a key structure such as this, we expect at some point in time price may come back, retest the structure to incite an uptrend situation. Now, if you had missed out on that opportunity, let's see if the market will come back and retest the 1,970 or even the ascending trend line to incite an uptrend move. But the most important thing here is the fact that as long as price remains above this ascending trend line, we shall feel comfortable in our buy position. Now, in as much as we're looking out for buying opportunities, we shouldn't get carried away of the potentials that sellers could still come into this market. Now, in this case scenario, you'll know that from a psychological perspective, when people buy at a very cheap price and price moves significantly in a particular direction in their favor, they at some point in time want to start considering closing in some of their positions to take some profit. And when the profit-taking activities began, we usually see selling pressure happen, which finally transitions into a retracement move, pushing price to the downside. Now, if that is going to be the case today, are we going to be seeing a retracement to push price to the downside, maybe to retest the major ascending trend line we spotted at the beginning of the week? Well, for us to capitalize on any bearish momentum here today, I would rather want to see price action break down both the 1,970 and that ascending trend line. And one interesting thing about this structure is how beautifully they share a confluence. Now, if price can break down both the 1,970 and the ascending trend line, then at this point I want to start considering selling. But remember that we are not going to be jumping into the sell position, neither are we getting too excited, as we are going to need some confirmation before we jump into that sell position. The breakdown of the ascending trend line could still turn out to be a false breakdown, so we want to be very careful. So if price breaks down the ascending trend line, a retest of structure will be a beautiful opportunity to join the decline to the downside. And if that will happen, we are looking at somewhere around our key level, which is situated at the 1,945 as a TP target, where depending on how price reacts to the zone will determine if we are going to be adding more sell positions or getting ready to join an uptrend move. So if we are joining the sell move, we are looking at a minimum of about 240 pips to catch here, and depending on how price reacts to these multiple levels here, we'll welcome more selling positions. So let's see how this will play out today, and by tomorrow we shall be back here again to review how well these assets have been doing. So it's on this note I want to round up for today's trading session. It has been a wonderful moment with you guys. So we were able to identify simple setup on all the assets we've been monitoring since the beginning of the week. So far today we attended to the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD, all of which we were able to use simple and fundamental tools such as trend lines, key levels, and chart patterns to gain insight into the market structure, and of course use the information gathered to unravel the potential direction of price action today. So I do hope you marked out these levels on your chart as well, as you will be needing them as a reference point to guide your independent trading decisions for today. And for those of us who are joining for the first time, I do hope we were able to gain one or two things today during the Extreme Speed live session. And in fact, I look forward to seeing more of you. The more time you spend with us here, the better you will become in understanding how our analytical approach works here, and eventually be able to use the information gathered to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course get ready for the second half of the trading week tomorrow. Remember, for every trade you are making, always ensure that you have a well-defined risk management strategy which is consistent throughout all of your trades. This is very important, as it helps you protect your portfolio so that you can live to trade another day. And please also note that for every decision you are making in the financial market is more or less an educated guess until price action hits your TP target. So on this note, I want to wish you all the best of luck today. I see your comment B29, Matt Damon, Visiborg and Innocent Babe says gold is his favorite too. That's interesting. So I wish you all guys this best of luck today, and do have a wonderful and beautiful evening. Bye bye.